Welcome to the Troy Kearns podcast. We discuss real estate investing, entrepreneurship, and business to help you retire and become financially free. Make sure you share this podcast with someone who could benefit from it and leave us a 5-star review. It truly helps me out. This show will mentor you towards financial freedom. If I can do it, so can you.
I am here with one of our very good friends and someone that I've known for almost 20 years because we competed at the REO events. Charis Abrams, the lovely wife to one of my best friends, Jason Abrams. Thank you for coming to the podcast. You're a dynamo. I've watched you run around for the last 4 days, closing loans, doing big things. I'm excited to have you on the podcast.
Thank you. Thank you for having me.
So tell me about who is Charis Abrams and what does she do?
So I'm the president and founder of Max Capital Lending. We currently provide financing for over 2,000 individual investors, 242 builder developers.
200 individual investors, 242.
2,000. So we're servicing over 2,000 investors across the country.
Wow.
And when I say investors, most of them are fix and flip. They'll hold rental properties, DSCR, loans with us. The builder developers that I mentioned. So currently I'm financing and funding solely over 242 builder developers. These are guys that are building from the ground up. Wow. They're taking large pieces of land. They're dividing it up into 10, 15, 25 parcels at a time. Wow. And they have all their ground up construction financing with us.
So when did Max Capital start and how did it start? So a little bit about, can you talk to me about what you were doing prior to Max Capital? Because I think that's important that people understand, like when people see you online, they might say, well, you've been lending for years and years and years, and that's what you do. But I think that your background is so important to to where you're at now, to where you got to. So can you walk us through kind of like the last 20 years of your business life?
So 2007, I relocated to Vegas, early 2007. I was Lehman Brothers' sole listing broker for the state of Nevada initially. I was their listing broker. They utilized Aurora Loan Financial, was their loan servicing company, and I was their sole REO broker for the state of Nevada. I also helped in my family's office. We were all in REO in some way or fashion.
REO is foreclosures.
Yep, real estate owned. So we listed several hundreds of REOs a year.
Thousands.
We did end up doing thousands between my account, my sister, and our family's account. We listed thousands of REOs.
Do you know that when I first came to town, your family's name was like the first name I saw when I saw REO. Everything that was doing, like, because I came to town in Las Vegas when it was REO Boomtown, or right before then, I bought a property before it became REO Boomtown, and everything that was going on was your family. And the way I got to know you is at the REO conventions, it was you and your sisters hustling, and you knew if Charis and Erica were around, like you almost wanted to follow them because they were where business was getting done. And I truly mean this because I was out there just trying to make it happen. And I felt like you guys always had the upper edge because you were always with the asset managers. They were your friends. And we know if they're your friends, you're doing business with them.
That's all true. You've mentioned Rio Mac. We were actually on the board in the very first year that Rio Mac started. So we helped plan the conference for several years. We also had our own conference every single year. So for all of these banks and asset managers, we were so close to them. They were friends of ours, business associates, and we had been in Fannie's since the 80s. Wow. And like I said, in 2007, one of my first accounts was Lehman's account. Then I walked right into other major banks that aren't in business anymore. Wilshire Credit Corporation, Dyson & Dyson, several.
Wilshire was a good one for me too. I remember that one. They were at Newport Beach, weren't they? Or they used an asset company out of Newport Beach.
They used an asset management company out of Newport Beach.
What was that one? Like New Res? No, it wasn't New Res. I forget what it was. I got a lot of Wilshire properties. Lit Loan Service.
Lit Loan Service was incredible. They were incredible to us.
Yeah.
Listed hundreds of homes for them as well. And thousands. So I think in the end, so 2011, 2012, there was that Assembly Bill 284 that came into play
Yes.
in Nevada. And so at that point in time, I kind of strategically started focusing on a software to track defaulting notes across the country. So transaction management, this software we created to help track defaulting loans. We had hedge funds, several registered REITs that were doing the REO to rental, they were buying. In addition, we helped several hedge funds that were out there buying non-performing loans in bulk. Not 100, we're talking 1, 2, 3,000 properties in bulk. And we set them up in this software. We help disseminate thousands of BPOs a month.
BPOs are what?
Broker price opinions. So these large hedge funds, when they were getting ready to build on portfolios with thousands of assets in them, they would upload the tape into the software, and we would disseminate those valuations across the country to agents. And in return, we had these agents doing all those valuations for free. And if the hedge fund won the bid and they got the portfolio, it would automatically be assigned to them as their listing.
So you're an entrepreneur.
I am an entrepreneur.
I just want to be clear about that, because I think it's important for anybody who's listening or watching right now is I don't want to present you as a lender. She's a businesswoman and she is a grinder. She spent the last 4 days at her house grinding, getting deals done. You're addicted to business.
I'm addicted to business, yes.
So what was the reason that you transitioned from defaulting loans into lending for hard money, for new construction, for all the things that DSCR, for all the things that you just mentioned?
Yeah. So right now we are a direct institutional lender. So at this point, Max Capital Lending, we can't run out of money. We've got to the tune of over $100 million a month provided to us. And we've been asked to increase our volume. I can't, how I got there. So, my husband started fix and flipping. We use private investors. We moved to a family shop. Family shops typically are comprised between, 40, 60, $100 million at a time. And we were running through their money. So not only were they funding us, we started taking that family shop's money and helping put that money out in the streets to other fix and flip investors. And then we outgrew the family shop. And like I said, now we're not, we have a relationship with a hedge fund, with multiple hedge funds. We also sell to the 3 largest aggregators for DSCR loans. We're very comparable. If you came to me for a rental DSCR loan today, we're doing a soft pull on your credit, no hard inquiries. You're not providing any income. I don't even ask if you're employed. It is really and truly asset-based lending. Our
Well, let's take a step back.
Yeah.
I think that's so important. So you don't care if I'm employed?
I don't.
What about my credit score?
I need a credit score of 660 or above if we're
Okay.
looking at long-term rental properties. So if you're coming to me for a 30-year loan, if you came to me for a 30-year loan today, where I'm not asking for income, and we all know how big that is with your traditional and community banks. They want to know if you're employed, they want to see tax returns. We're looking at a minimum FICO of 660 or above, and we're looking for the property to yield a 1% loan rate, a rental ratio. And as long as those two things are happening, I'm at 6.675 on a DSCR, making me very compatible with every single community bank.
So what about my hard money loan costs? Where are you guys at on that?
So hard money, we're in the 9s. We're about 9.875.
That's not bad. No, that's really good.
That's for someone with experience.
Okay.
I mean,
What
we
is
have
experience
brand new-
equal?
So brand new investors that are coming to us for their very first fix and flip, we're going to be between 11.5 and 11.99 until they've done 3 deals with us.
So experience equals 3 deals.
Where if you come to us and you have 10 or greater flips in the last 3 years, you're coming in the 9s right away.
And how much money do I have to put down?
10%.
10%. And how much are you funding of the rehab?
We are always 100% of the rehab. So if you bring me $1 million flip, you're bringing $100,000 to the table, I'm going to provide 100% of the renovation budget. So for simple math, if you've got $1 million asset with a $500,000 renovation budget, let's say you're reselling the thing for $2.5 million. I'm just for easy numbers. So we've got $1.5 million in the deal. You're going to bring a $100,000 down payment and our loan costs. Typically, we're around 2% for less experienced or when you're in those first 3 loans. But you always want to bank between 1.5% and 2% origination. But for that, we are going to finance 90% of that purchase. That means we'll bring $900,000 of our money to the table. We're going to provide that $500,000 renovation budget. So we're going to cover 100% of the reno. In addition to that, we're one of the very few lenders in the country that will defer the payments to the back of the loan.
I've never heard of that. I absolutely, I will tell you unequivocally, you guys will defer every payment to the back of the loan.
On our short-term 12, 18, and 24-month loans, whether it's a fix and flip, ground-up construction, a short-term bridge, we are deferring the payments to the back of the loan.
How do you guys do that? Like, how is that able? I've never heard of that.
Can't tell you how we do that.
No, I don't. I mean, like, that's crazy.
Yes.
So
We really
let me just explain that for people who are listening who don't know.
Yeah,
Deferred payments means I don't have to pay any money until the house sells.
that's correct.
Potentially, unless I took forever to do it.
Yeah, we're very high touch. Our borrowers, we see them multiple times a year. You'll get an assigned account rep in my office, an assigned closer, an assigned closing manager. We have Lily, who's one of our greatest. We call her a client support specialist. We've created group chats with we have an office phone with 2,000 group chats created. Well, so if we understand that our investors aren't always by their computer, they're driving down the road, maybe they're getting a counteroffer, and they want to know if the terms are going to change with us. They tap in, text the group chat real quick, and you have 1 of 5 of our guys in the office jumping to it immediately. Hey, it's going to change. You're now going to bring $110,000 to the table versus 100. But other than that, we respond almost immediately. That's what those group chats are for.
Charis, where do you see this business going? Because it's ramped up so quick. I remember when Jason was just first talking about it. Now, who came up with the name Max Capital?
I think both of us.
Okay. Was that based?
Maximize your capital. We'll give you the maximum
Well, your
amount of
son's
capital.
name is?
Both of our sons. So we have Ari Maxwell and we have Maximilian.
Because I was like, I'm pretty sure Max Capital was around before Max was around. And I'm like, so.
Well, so Ari's 11 and Ari has been Ari Maxwell for the last, 11 years. And technically Max Capital's inception was about 3 years ago. We operated under another name for our private lending.
Yes.
But Max Capital is that's where we hold 44 licenses across the country. 42, our last 2 are pending. So we'll be operating in 44 states by
So
August 1st.
let's just do by omission which states that you don't lend in so that people who are listening right now know, because there's 50 states. We all know what they are. What 8 states do you guys currently not lend in?
So it'll be 6 now. So we're not operating in the Dakotas because by August 1st, in 10 days from now, we'll be operating in 44 total versus 42.
Okay.
We're not in the Dakotas.
Big deal. No flippers there. Okay.
There's actually a lot of flippers in South Dakota.
Well, maybe some new construction with those oil fields.
Yeah, I get calls for South Dakota once a week, I think.
Okay.
So we're not in the Dakotas. We try to stay out of the Virginias. We have the ability to broker loans out in those other states.
Okay.
We don't have the ability to broker in South and North Dakota. But when I say that we're operating, we're funding and closing in Max Capital's name in those 44 states.
Are you guys doing Alaska?
Not.
Nobody's
We're not licensed in Alaska, but we broker out. So
can you do business in all 50 states by brokering?
By brokering, we can do them in all 50.
Okay.
But we operate where we have full control. We fund in our name, where we have direct lending in the 44 in those states, and with the exception of the Dakotas, we don't broker out to the Dakotas.
Are you guys in New York?
We're in New York.
That's like the hardest one to get your license in, isn't it?
It is.
So you guys are growing rapidly fast. So let's make your pitch as to why someone should consider using you and Max Capital versus another lender out there. Yeah. You've got a lot of competition. We won't talk about who they are right now, but I think the biggest thing is, you got to trust people with your money.
You're not going to find any other lenders like us. We know the partners in these companies, whether there's one person on the entity or 3. We get to know every single one of them. We have onboarding calls. We talk to them about their long-term goals. When you go to a lender, especially the big national lenders, and I think everyone will say, oh, Kiavi, I go to Kiavi. You got a different guy every time. Nobody is having that conversation with you. And where do you want to be in 3 months? Where do you want to be in 6 months? And Kiavi, we have beat not only with our deferred payments.
Oh, yeah.
But we're giving advanced draws. With Kiavi, you're going through a reimbursement process. They want you to put your money out first. If we have a $100,000 holdback with Max Capital, the day after close, we're releasing the first $20,000 for you to get started.
Well, I think that's huge. I think that's huge for people that don't even know that. Like the fact that you're willing to do deferred payments and you're willing to, when you said I don't have to bring in the money for the construction.
Yeah.
I don't think people truly understand what that even means. I'm like learning stuff right now.
And we do so much more. But when we get a file in our lap and someone says, I just got this offer accepted, Charis, we're at this purchase price, here's our renovation, and this is what we're looking to resell it for. My team takes that. We do a buyer's agent introduction. So on day one, their buyer's agent knows us. We reach out to the listing agent. Hey, we're the lender on this file. Email us anytime. We send milestone updates on Tuesdays and Thursdays. All these big national lenders, they aren't sending milestone updates. They're not reaching out to the listing agent.
I've never heard of it. Yeah, you guys are operating because you have a background in real estate.
We do.
That's the difference.
I was the broker of 400 agents.
Yeah.
I was a broker of 400 agents, 17 years ago, 18 years ago. And so I understand the stress that the listing agent's going under, that the buyer's agent has with their borrower, especially when these agents are representing brand new fix and flip investors. When we look at a loan and we see the house and clearly there's a gaping hole in the middle of the roof, and we see a first-time investor leaving off a roof as a line item, we bring that up to them. So in addition to our onboarding department, where Sam in our office, Sam and his two assistants, will onboard the borrower. So we know everything about their entity, where their target markets are, what are their goals. If they're brand new, we give them kind of a checklist. Hey, make sure you're getting this to us on the first deal. Our closing managers, like I said, we order title for them. So we'll open, when they tell us who the title company is, we reach out and we get everything that we need. We never look to the borrower. We coordinate their homeowner's insurance. So we're reaching out to their insurance agent. We're reaching out to title, and we've got it locked down with these buyer and listing agents. So our borrowers don't worry about anything.
Now,
full service.
Platform. How are these guys getting their statements? Do you guys offer some sort of a...
We do. So we're in Salesforce. So we utilize a Salesforce app, several of the Salesforce apps. We give them a login credentials for their draws. And then the day after close, we do a draws training with them on the very first one. I've never had a borrower come back on the second, third, or fourth deal and ever need additional training. Our draws are easy. They're a glorified embedded Excel spreadsheet, and they go in and they check mark the boxes, and we have their money to them. If it's an interim draw, like I said, after closing, we're giving them on a $100,000 holdback, we're giving them their first $20,000 on day one. So they're not coming out of pocket. Our experienced fix and flip guys, they were always capped holding 3 or 4 properties at a time.
Yeah.
They have more than that with us now because they're not worried about all that cash flow management, making the payments. And now that we're giving them their rehab budget up front, or part of it. If we're doing a $100,000 holdback, we don't give them the entire $100,000.
Yeah, it's just called management of expectations.
We break it down, and so on $100,000, we'll break it down into 5 draws, 5 payments. But if they want to take $5,000 or $10,000 in the interim, we don't require them to stay at 20, 20, 20. They talk to us, they tell us where they're at in the project. And that's another thing. A lot of these lenders, they send out an inspector, and then that inspector has their own feelings about how the project is going. We're completely app-based. So they're uploading progress photos to us. And we're processing their money in 48 hours.
Wow.
Yeah.
If I'm, what kind of a relationship are you guys trying to have? I think it's important. You mentioned Sam. Sam's your son.
Yeah.
You've got your family working in the business. Jason's on here. He's involved in your business. Who else is involved in your business?
We have several other employees that are not related to us. We're not.
No, I think that's a good thing. No, I'm not trying to say that's a bad thing. I think
we love it.
Well, I mean, people want to work with family-owned businesses because they care.
We do. Like I said, we're very high touch. We've got their birthdays. We know when their birthdays, we're sending them their 1-year anniversary from the time that they onboarded to us. We send out happy birthday. We really become really close with several of our borrowers.
So if I'm brand new, I'm welcome at Max Capital.
Absolutely.
If I'm doing 5 to 10 loans a year, I'm welcome at Max Capital. If I'm building new construction from the ground up, I'm welcome at Max Capital.
Absolutely. If you have a broken project that you started with another lender and you're just in the weeds with them, I will keep profanities out of it. But if you are, in a bad way, you can come to us with a broken project, and that's what I refer to as our rescue loans. So we will take somebody out of a bad lender's. We have guys come to us, hey, I haven't been able to get reimbursements. I started a loan with a lender. I'm waiting 3-4 weeks for draws, for reimbursements. We will pull them out of a mid-construction project. I mean, we have to look at it and make sure that it's good for us. But the majority of the time, we are also taking borrowers out of bad loans with bad lenders.
So I think that's compelling for anybody else. Is there anything else you'd like to talk to other people about?
So, us being as competitive, I was saying our DSCR 30-year amortized loans, we are competitive to your community and local banks, except for here's the difference. When you go to your community bank or your local bank, you're going to be capped after you get 10 rentals. I have guys that are holding 60, 70, 80 rental loans with us. None of our loans are reported to your personal credit, so it doesn't hinder you from wanting to maybe cash out, refi your primary, or move up. Maybe your family's growing and you're moving up into a bigger home. When you go to these local banks or your Chase or your Wells Fargo or your Bank of America to do rental loans that so many people have been trained to do for so long, that's going to count against your liabilities, and it's going to hinder you from being able to do things on a personal level. We have all loans that you get from us, they're business purpose loans, they're business credit. So have you ever gone and leased a car under your company? It's never on your credit. When you go to lease a car in your name, everything is reported to your personal credit.
That's big time.
This is how we have.
Do you guys do auto loans?
No.
Come on, I need one. Montana right now.
But this is how guys are able to hold 60, 70, 80 rental loans with us. The soft pulls, not having hard inquiries, it's a big deal.
Yeah, absolutely. That's fascinating. I know you guys are like literally on your way to the airport right now. Yeah. So new construction, that's something that is very tough to do. Like not from a lending aspect, although I do believe it's tough there too. But how does a borrower demonstrate to you that they're capable of doing a new construction job?
So I will say, the loans that we talked about where I'm deferring the payments and giving 100% of the construction, those guys, I need at least, you need to come to me with one ground up construction past project. I do not do in-house direct lending. If you're coming to me and you want to do your very first ground up construction loan, we're not the company. However, I will broker that.
I don't think that company exists, to be fair.
But if you've built one ground up construction loan, no one beats us. So we have, whether you go out and buy a lot, so if you're going out to buy a lot, we require 25% down on the lot only. We're still going to defer your...
So you're funding 75% of the lot?
Of the lot. But most of the lots that we're seeing right now are between $30,000 and $100,000. On the, median things that we're pumping out, 40, 50 of those a month. It's 25% down on the lot. Here's the beauty of it. We are working with so many builder developers. If you have a lot that's owned and that you've put improvements to, you bring us the lot that you've already owned or several lots. I mean, I've got guys with 40, 50 sticks in the ground with us at a time, at any given time with us. Maybe 10 are in escrow, 30 are in the build process, 10 are, 10 are coming to completion. But here's what we will do that not a lot of people do. If you have a lot and you've improved it and you're ready to build, when you bring those to us, whether you've done a cash out of pocket or you have another lender in place, we're allowing you to re-leverage at today's value. So maybe you bought the lot at $20,025. Today it's worth $50,000. I'm going to give 9 out of 10 of our borrowers, when they bring us a lot that they've owned or that they purchased in cash, we're giving them cash at close. We're providing 100% of the construction, and they won't have a payment for the 12, 18, or 24 months.
So you're just borrowing them money till the project's done. They don't have a payment to make until the project's done. So what is that? I think that's so important that people understand that, so I can just keep scaling because I don't have to keep funding that deal.
And if you came to me with a lot value of $100,000 today, even if you bought it for $50,000 and that lot is ready to build on, when you bring me that lot and we value it with $100,000 as is lot value of today, a site value, I'm giving you $75,000 back at close. So you're bringing me your lot that's unencumbered. I'm giving you $75,000 at the closing table. I'm providing 100% of the construction, and we're deferring all those payments.
I mean, it almost sounds too good to be true. You know what I mean? It just almost sounds too good to be true. Makes you want to get in the new construction game for sure. Because typically the way the new construction game works is, you want to explain it? Typically what your competitors do? Because I think it's so important to understand that this is not normal.
It's not normal. A lot of banks want 50% in on the lot. They want you to bring 25% of your total build budget. So if you have a $200,000 budget, they want you to bring 25%. They're only going to fund 75% of that $200,000 build, where we are 100% of your build every single time.
Wow.
We are your partner. We want you to see it through to the end. We want to see it with you through it till the end. And that is why we're so committed to 100% of the build cost on all of our loans.
How long are those payments deferred for? I know you mentioned it.
So we do 12, 18, and 24-month ground-up construction loans. And on each one of those, we're deferring payments. So if you have a 12-month note with us, we're deferring it out for the entire 12 months.
Is my rate higher if I'm going 18 or?
We will keep you at the same rate for the 12, 18, and 24 months. That has a lot to do with the scope of work. If you're telling me you're building a 7,000, 8,000, 10,000 square foot home and we've got $1 million build, well, we're going to suggest, or we're going to require really, hey, this loan needs to be a minimum of 18 months. If you have a track record and you're saying, Charis, I get slab to CO, I've got a lot of guys that are slab to CO on a 2,800 square foot house in 4 months, well, we're keeping the notes at 12 for them. We look at how you've been building in the past and your track record, and we're considerate with that.
That's awesome. I mean, I think so many people need to know about that right now, because I built a lot of houses. And most people stay away from new construction just because of the banking, because of the enormous amounts of red tape. And is this a newer product for you?
So this is a perfected product for us. I wouldn't say newer. We've been offering the same type of financing, but over the last 4 years, we've perfected the product. We've been able to defer the payments. We're committed to that 100% of the build, 100% of the construction. And so we've perfected the product. But no, we've been offering this near perfect product for the last 4 years. It just wasn't perfect when we started it.
So we know that projects don't always go according to plan.
Yeah.
And I need to refinance into a DSCR loan because I just wasn't able to sell my flip. Mm-hmm. I wasn't able to sell my new construction job.
Yeah.
How can you help me?
So again, in the beginning of this, I told you we sell to the 3 largest aggregators of DSCR loans. So that's why you're going to get these very competitive, comparable to your community banks, because you're getting hit. Your bank doesn't want to do non-owner occupant loans, so you're being hit with those rates. We don't. This is our, this is our meat and potatoes. DSCR loans, we're doing 30, 40, sometimes 50 single asset rental loans a month. We're doing another 50 to 80 on the fix and flip and ground up construction side. So we're averaging over 100 loans a month, month after month right now. And we have the capacity and the bandwidth to double that. We have the funding to double that.
So if I'm in a jab and I can't sell my property, do I just refi with you into a DSCR loan?
Absolutely.
Okay.
So whether we're servicing the paper or it's a failed project with another lender, we want it all. On the DSCR side, we're going to have a conversation with you. So if your house is worth $400,000 today, we can leverage you on a DSCR loan up to 80%. So we will finance you out up to 80%.
Okay.
And we do cash out. So if there is a little bit of equity in there, and maybe after we pay off the note holder and they're at 70% LTV, we're going to give you that additional 10% out in cash, or you can choose to keep a little bit lower rate and stay rate and term.
Okay. So what's my rate on my DSCR loan?
So right now we're at about 6.675.
And is that if I keep cash in the deal? Or
that's a rate and term. So cash out, you're going to be hit maybe an 1/8 to 0.5%.
Okay. So it can go anywhere from 6.8.
So you're going to be closer to 7. You could be closer to 7
Close
on
to
a cash
7%. So if you got it, and I think that's so important because we're talking about all the rosy stuff, but we already know that real estate doesn't always go according to plan.
Right.
And you find out really quick when the lenders start getting their claws in you a little bit when things don't go according to plan. And I have a lot of knowledge in that. Like I've had deals that have gone tits up, and you have to you're like, all right, I got to pull as much capital as I can out. I got to ride the market out, and I got to live to fight another day.
So, you know what's interesting? Through July 2022, I was financing short-term, long-term. So July 2022, I mean, that wasn't that long ago. I was giving DSCR loans. Our rates were at 4.25 on short-term. So again, another negative to the banks. In addition to them being on your personal credit, they don't want to see Airbnb short-term and long-term rental. They think it's a not a safe product, not a secure product, where we love that. If you have short-term and long-term, if you have short-term rental history and you say, Charis, I own 4 or 5 Airbnbs, we're actually going to allow you to use those short-term rental comps for the loan.
When do you guys get into the commercial space?
So
I mean, that is something, I mean, you guys are crushing it. Is it like, we're so good at this, we don't want to do that? Is that kind of the thing?
So we launched a commercial arm, full commercial. I mean, when I say commercial, we're talking, I mean, big buildings 10-story buildings downtown to nursing homes. And because I box in commercial with, anything that has retail shops. Now, we launched that in June. Not our specialty. I mean, our core business is the RTL, or what I call fix and flip, is RTL, a residential transitional loan. So our fix and flip, our ground up construction, our DSCR, short and long-term rentals on the SFR, and we do portfolio lending. We've been doing portfolio lending for a long time on the rental loans. So if you come to me and you have 10, 20, 30 rental loans that you want to bulk up for a little bit lower rate, we will portfolio those rental loans for you.
Let's talk about that. I've got 20 properties with a local bank here.
Yeah.
That I pulled some money out of, that I've either thought about selling it, paying off the debt, or portfolioing it. For those people who don't know what a portfolio loan is, because a lot of people don't know, what is that's going to be better for me. Let me talk about a couple things. Number one, if I sell a property, it comes off the portfolio, right?
But if you sell a property, it comes off the portfolio. So here's the negatives to portfolio lending.
Okay, let's talk about it.
All right. So if you have 20 properties and you sell off one and now you're at 19, there's a clause in portfolio lending that as you're selling off, you have to put back 20% of, so we're at 120% of a house that you want to sell off. So you're going to have to put back 20% of the profit into the portfolio. What that means is, so if you have $1 million, let's just say for easy math, $1 million loan balance, and you sell off one of the properties, we want 20% of those proceeds to go back onto the principal balance of the 19 homes left in the portfolio.
That's no big deal.
Sometimes it is a big deal.
Unless there's no money in the deal. Unless there's no money in the deal, that's a big deal. What's the benefits of going with a portfolio loan?
So you're going to be 35 to 50 basis points lower on the rate.
So I'll have a better rate.
You'll have a better rate.
What's a portfolio loan rate right now?
So it's interesting. Right now, our DSCR is pretty close. Maybe you're getting 6.5.
Okay.
You said that's 6.675. There's not now. 2-3 years ago, you were saving at least 0.5 percentage rate, and that's typically standard. But right now, our DSCR rates are, I mean, we're really low. We're trying to be really comparable to all of the local community and commercial banks. And like I said, rates will be going down. Through July 2022, we were in the 4s.
Yeah. What do you think the rates are going to get to, Rick?
Oh, God, no. Does anybody have I mean, nobody can.
I mean, just from what you're thinking, we're in the Trump administration. They went from 2.25 to almost 8%.
I think that we're going to see DSCR loans between 5.5% and 6% by next summer.
Okay, awesome. How do people get a hold of you if they want to apply with Charis Abrams and they want to get a hold of Max Lending? What's the best way to get a hold of you?
So themaxlending.com, or we've got a phone number 702-887-1800. We've got the Instagram. You guys can hit us up on Instagram.
What's your Instagram handle?
The Max Lending.
The Max Lending. How do they get a hold of you personally?
702-887-1800. If you call that number, we've got somebody manning that phone 7 days a week, 24 hours a day. So it's a cell phone. You can call it, you can text it, in addition to our office lines, but that's the easiest.
Awesome. Well, I appreciate you coming on. Is there anything else you want to tell somebody I think the most important thing to talk about Charis is, if you're a realtor, she's been in your shoes.
Yeah.
If you've been grinding it out, flipping homes, she's been in your shoes and is sleeping with someone who's doing that on the day-to-day and has 2 children with them. Okay. And so I think that speaks volumes, like huge, huge volumes, because lenders are just lenders, generally speaking, and they
Most of
haven't
them don't have any experience.
Well, when you told me you're doing like the whole thing with the insurance and the introduce, I've never seen a hard money lender do that. Never.
We're ordering your title. We're coordinating with your homeowner's insurance guys. I mean, we are so high. We are very high touch, and we understand, specifically me, but most of the people in our office, they all have experience in real estate or escrow, or they were an investor. And we are very considerate to what the listing agent's feeling, what the buyer's agent is feeling, and then you as the investor, how important it is to close on time and the shit that's on the line if you don't.
Well, the one thing I did notice, the negative about your company, and let's be clear, is that like you guys are 9 to 5, you work banker's hours. I've been around you enough to know that like you're not answering the phone after 5 o'clock, right?
That's absolutely not true.
No, I just kidding. We were at Farida Steakhouse last night and you're doing deals. So you're like, the reason I said that is because I think that a lot of bankers.
They keep bankers out.
They keep bankers out.
All the big companies, I mean, they're 5 o'clock East Coast time. Some of them have a secondary, they have secondary reps that may or may not answer the phone to 5 o'clock Pacific Standard. But when you go to these national lenders, they're typically located on the East Coast. So if you're operating anywhere other than the East Coast, you've got to catch them, by 12 to 3 o'clock your time.
So if I call you guys on a Saturday, is there a chance that I might get a response?
100% you're getting a response.
What about Sunday?
100% you're getting a response.
Wow.
We have somebody manning that 887-1800 number 7 days a week, 24 hours a day. They'll answer text messages at 11 o'clock. I mean, it's important. Our investors, when you're putting in offers, are you not getting something accepted at 7 o'clock at night or 7 o'clock in the morning?
Yeah.
We understand it. We've been there. We've been in it. We flipped hundreds. My husband and I flipped hundreds of houses before, the inception of Max Capital. So we understand how important that is.
So what I'm getting from this entire podcast is Max Capital wants to do business with you.
I'm on every single one. We want to do business with you. I'm on every single one of these group chats, even though it's that office phone. So we've created a group chat under the borrowing entity for every single one of our investors. We have 2,000 investors. We're working with just over 242 builder developers, and every single one of them have a group chat with us where they just hit up, instead of dialing the number, they're typing in their entity, I Buy Homes LLC, and they're able to text message us at all hours of the day.
Awesome. Anything else you want to share with our audience?
So we're one of the very few direct lenders in the country that are with you all the way. When you order your payoff, when you go to sell the house, they hit us up, we get you your payoff. I think for anybody watching this who's ever done a hard money loan before, once that's closed, they're not talking to you anymore. They don't talk to you. You are brokered out. They certainly aren't ordering your payoffs for you when you go back on the market. You're like, oh, Charis, we got a cash offer. They want to close in 10 days. I need my payoff. We're doing all of that for our borrowers from cradle to grave.
And I think the most important thing is, no matter what side of the industry you're on, she's been in your shoes.
Yeah.
Her husband's been in your shoes. And that speaks volumes, because as they say, if you've never walked a mile in somebody else's shoes, like, you just don't understand it. And like, you're trying to service all facets of that relationship. And that's what I see coming through. And I'm really looking forward to doing more business with you guys.
Us too.
All right. Thanks for coming on. Guys, make sure you subscribe. Make sure you give this one a 5-star review, and we'll check you on the next one. Peace.
Man, I am so happy that you turned into the Millionaire Mentorship Podcast. It's something that I've been working on for over 3 years right now. We're up to 150 podcast episodes. A lot of them are virtual. A lot of them are in studio, which is what we prefer. If you have a guest that you think that should be on our podcast, all you got to do is comment who it is, and we'll reach out to them. Or if you want to reach out to them and reach out to us, we'd love to have them on the show. We're looking for entertaining, inspirational people that, just like you hear on the podcast, every week that can bring value and help our listening audience achieve their goals. If that's something for you, comment down below and let us know.